We'll call to order the Monday, January 9th meeting of the Ogdensburg Bridge and Port Authority Finance Committee. And our primary business on today's agenda is to review the November financial statements. And Sam, I'd be inclined just to turn things over to our Chief Financial Officer and ask her to review this. If you're okay, Patty?
Sure. Our reserves and other restricted accounts on the balance sheet is still quite healthy because we still have the money that was given back to us by the Corps of Engineers that we still have not spent.
No, it was New York State.
New York State.
Yeah.
Our regular accounts receivable are at 374,000, which means that all of our money is coming in almost on time.
Mm-hmm.
We're no longer having payments out. The only one that's really still out there is the bill for duty free for what they owed for last year, and they're just paying down on the original invoice, and that's about the only thing that's old that's out there.
Mm-hmm.
We've gotten quite good at collecting all of our other cash.
But duty free is maintaining some activity on the account. It's still active.
It's still active. Their lease comes up in May for renewal.
Mm-hmm.
And we're having to really look hard at what they're able to pay and what their sales are, on which we get a portion for part of their rent. So I think we may have to really look at what we've been charging them over the years and see if we need to adjust that going forward.
Mm-hmm.
Our AEAS was at 1.1. We are down to 0 at this point. We've gotten all our money back in from USDOT. And the wind turbine project, most of that 196 is now in-house. So there's not much out there in accounts receivable.
I would break in for just a second. I got a message from Dave that says, just realized I forgot to move the date on my calendar. I'm in Malone.
So,
Good thing we didn't wait.
so
Right.
All right. Our fixed assets are as we see them. Our total fixed assets are 166 million, and just under half of that is depreciation. So our net fixed assets sit at 92 million. Our construction in progress still sits at 4.3. We're waiting for the final commissioning of the Malls F to get all of that off the books. Our regular accounts payable sit at 524,000. Our AEAS contour is at 761, and that has all been paid off. And our project accounts payable was at 359 at the end of November. Everything that made up that 359 has since been paid.
Mm-hmm.
So we're doing quite well there. Any questions on the balance sheet?
We go back to the accumulated depreciation. Is most of that from the bridge?
The bridge, actually, no. If you look at your itemized fixed assets, the buildings have the largest amount of value.
Makes me wonder
Makes me wonder.
how old our assets are.
Many. If you look at many of our line items, they are fully depreciated in certain areas. If you look at, other than the new truck that we got this year here, I believe all of our vehicles here are fully depreciated. If you look at the port, other than our new equipment, I think you'll find the same. Our signs are fully depreciated that we had on the fixed assets. A lot of our furniture and fixtures, which includes computers, all fully depreciated.
Another interesting item to relay onto Albany.
Fuel trucks, where are they? They depreciated?
They shouldn't
They
be.
shouldn't be,
Shouldn't be.
but they're a large expense.
The fuel trucks were,
They're not even 10 years old yet.
No.
no, but they
They
were
were
less than $1 million
$500,000
apiece, weren't they?
Oh, yeah, they were.
So they're probably about half,
Okay.
a little bit more.
But it's usually, isn't the depreciation rate set, let's say by the IRS?
Yes, and it depends on what the item is.
So maybe a truck might have, do you have any idea what the length of period of depreciation?
Most trucks are 5 to 10.
And these trucks probably will actually have a life substantially beyond the depreciation.
Well, they have been.
Oh, yes.
They don't have mileage. It's
Yeah.
just definitely, yeah.
It's
But
just
the buildings are basically 20 years.
20 to 40.
Yeah,
Buildings and
that's-
land.
And some things are actually realistic, like I think computer depreciation might be 3 or 5 years, and that's about right.
It is.
Yeah, right.
I'm beginning to think that computers shouldn't be depreciated at all
They're to
because
be expensed.
it just expense them when, as you go, because they aren't any longer made to stand.
James, does this make sense?
For the most part, yes.
Yeah. But things like cars, depending on how you handle them, you know, they might have a life substantially beyond the depreciation range. But still, that's a real indication that our fixtures and our equipment is aged.
Mhm.
I can actually break that down by area if we wanted for the end of the year, just to look at it and say,
It might be a good idea when we do the budget review.
Yeah.
Going into next year, just to have an idea.
okay.
Thank you.
Any other questions on the balance sheet?
Not we,
Okay, if we go to the budget to actual, you'll notice that the airport revenue is way down. That is due to at least for November, we're still up for the year, but there is no more corporate hangar lease that SkyWest had. So the amount that we can get every month has been reduced by a fair amount. The airport revenue AEAS, or the fuel sales, I'm sorry, is still up in November and still healthy overall for the year, but it's down almost $46,000 from October. Our fuel sales in October were $73,000.
That's just a reduction in the amount of flights.
Amount of flights, the amount, and we always see a reduction in GA traffic during the winter.
Right.
So that's not unusual. Our industrial park November income, you'll notice is a healthy 12,000 to the good. That's due to Anthony's quickly getting 2 replacement tenants into building 11. So we see that, and our overall year to date was at 37 last month. So that is really making an impact on both the month and the overall.
Good job.
Our salary expenses at the bridge continue to be below budget, partly because we did not fill the general mechanics position. Our overtime, at least through November, was not as high as we budgeted. And part of the economic development director salary is in the industrial park. And if salary expenses are down, so are our employee benefits. We don't need as many. Our bridge expense for November is up, and The main reason for that is we had budgeted Parsons' invoice for the bridge inspection to come in September, not November. So it's just a timing issue. It's all fine in the year-to-date actual. The airport maintenance expenses are high for November. I believe it's mostly timing. We received sand deliveries and 2 MX fuel deliveries in 1 month. So I think that's just a matter of timing. Our general expenses are up, but I found a mistake reviewing this morning. There's a $23,000 invoice to McFarland Johnson that should have been put in construction in progress. So if you take that out and put it where it belongs, we're healthy under budget. Our maintenance expenses in the industrial park are high for November. I don't know exactly when the repairs were done, but the invoices came in. The RSI repair to building 11 and the repair to the building 1 HVAC unit. So that again is a timing issue. Those two just came in. And utilities are a little bit below budget around, so I'm happy to see that. Keeps us going. Our marine terminal maintenance expenses are up. However, much of what's in there is re-invoiced for the equipment rentals and some of the equipment. So even though it looks high here, we are receiving the income reimbursements on the income side. And the legal expense under the marine terminal has been the Chrissy grant and the harbor deepening going away. Are there any questions?
I don't have any questions. Sam, do you?
Well, I'm just looking at
Mhm.
operating income without the grants at the end. What did we anticipate for this fiscal year? Do you remember operating income by the end of March?
We did not include one of the wind turbine projects. And this income also shows the AEAS coming in.
Okay.
So that's going to look awkward till next year's budget when we include it.
Right. So overall, you think we're pretty much where we expected to be for this fiscal year budget?
I think we're a little better at the end of November than we had anticipated. And I think a lot of that has had to do with the extra wind turbine, the ability to continue without some new hires.
Mhm.
Well, it looks to me as if the net of expenses and income after taking into account the Christie and ARPA reimbursements, I see an operating income gain of $1.9 million.
And of
Right.
that, most of it is AEAS income. And
help me understand, doesn't the AES expense offset that?
Offset that. So what have we haven't spent. No, that zeroes out.
Could be off a little bit because of the recording, when we receive the reimbursement.
That
when
could
we
be,
paid out, we'd be off a couple flights maybe,
right,
or a couple weeks maybe.
right.
But these two numbers on AES income and expense are so close together
Yeah,
Right,
that they have rather little effect on that bottom number, if I'm understanding correctly.
but we do have almost 300,000 over in fuel. Our terminal, our marine terminal, not only the wind turbine project, but the terminal itself both have given us almost $500,000 in additional income than we had anticipated.
So while we're not talking about an operational profit in that magnitude, with these grants, we've really received some working income that will help us cushion some of the difficulties that we're looking forward with.
Yes.
right.
And I don't know that that's going to show up ever at any point in a bank account where you see that, because I think you've been paying it out and
Right.
Almost as
whittling
quickly.
down payables,
Right.
catching up on other things, but it really does reflect an improvement in the position in the
Mhm.
past 10 months.
We have one more ARPA submission that we can do for the airport, approximately $190,000.
Yep.
And that will go in either January or February.
Mhm,
And then we'll be done with all of the airport
Mhm.
right.
Super.
grant monies for
Yeah, I
the
think
COVID.
when we first got that, we were talking that it would be gone by early 2023, so.
Yeah, right on target
Yeah.
with that.
Mhm.
Now, there'll be income out of December that we didn't anticipate with that salt ship, correct?
Right. Well, the salt ship came in
31st.
31st.
So It was
31st.
right late in the
Then
year.
we-
Right, so that probably won't be billed, it
then
wasn't billed until
one-
January.
Okay,
And then the turbine blade, we
right.
had another,
So we have a few little things
those
that,
are, yeah, total gravy.
Well, it's good to have some
Yeah,
perks.
Yeah.
Yeah. Good.
And we're working on things we can do for the start of the 23-24 budget. We've already got some things in mind that, they're not concrete yet, but I think
Yes.
there'll be a reduction on a couple things that we just couldn't, when we did the budget a month ago or a month and a half ago, we just couldn't commit to. So there's things in there that are going to soften that. It probably won't solve all of that, but we haven't finished this budget year, so.
Yeah.
And we don't really know where we'll end come March 31st. but-
That's right.
So March 30th or March 31st?
31st.
Okay, April, June, and, okay, yeah. So,
Yeah.
to go to a lot of things that, looking ahead,
That's right.
and I can fill you in on a few of those things that I feel pretty positive on, at least it'll drop down that number that
Super.
we came up with, but
Well, I think that it's great to review that number and, see what new information you have and what new take you have on things. And it's a good thing to take a breath and let things cool and, go back at it.
right. Well, it's a long stretch from November when we're making out our budget for April.
Yeah.
A lot of things can happen.
There's a lot of information that comes in that length of time. Yeah. Good. Good. Well, I don't mean to jump the gun, but do you have any more questions?
No, I don't.
I have no more questions. Any more reports? In that case, how about a motion?
Motion to adjourn.
Meeting adjourned.